Apple just announced a $100 billion stock buyback and posted $95.4 billion in revenue. But the stock still dropped. Why is Wall Street selling? Let's break it all down, guys. Here's what Apple just delivered for Q2 2025. Total revenue, thank you for the sub, $95.4 billion, 5% year over year. Net income, $24.8 billion. Gross margin, 47.1%. Services revenue, $26.6 billion, record high. iPhone revenue, $46.8 billion. Mac and iPad growth, ladies and gentlemen, drumroll, 7% and 15% year over year. This was a strong quarter, especially for services and iPhones. But despite the beat, Apple dropped around 3%. As you can see over here, guys, in the pre-market, from 213.3, we're at 207. That's about 3.4%. The reason, tariffs. Apple warned that trade tensions could add $900 million in extra costs next quarter. They also acknowledged slower growth in wearables and a decline in margin due to seasonal factors. This spooked short-term investors, even with the massive buyback announcement. But here's what long-term investors are watching. Apple plans to invest $500 billion in the US over the next 4 years. They're expanding production in multiple states and opening a new server factory in Texas. The new iPhone 16e launched with the A18 chip and Apple's first in-house modem. This is Apple doubling down on US manufacturing and its AI ecosystem. Apple Intelligence is now rolling out in more languages. But it's not all smooth sailing for Apple, guys. By the way, beautiful company, beautiful products, okay? Trade policy is still uncertain. Tariff costs could hurt margins again in Q3. Wearable revenue dropped 5% year over year, and there's growing regulatory pressure, especially around antitrust and data use. Apple is strong, but not untouchable. So, what's the takeaway? If you're a short-term trader, this volatility might scare you off. But if you believe in Apple's ecosystem, services growth, and long-term innovation, this dip could be an opportunity. I called it a dropportunity. Because, guys, I was looking at the charts, and long-term, we're still in an uptrend. We gotta go up, we gotta go down, and every time we go down, we break a trend line, and when we break it, after we create a support, right, we go up. We already retested a very strong area at 170s. If you look at the weekly, that's the 200 exponential moving average. So maybe getting a double bottom will be beneficial, guys. This area here is gonna be critical. We gotta break out of the trend line. And Dan Ives still has a target of 250. Hopefully, we will be able to break out of the resistance. But if we don't, I think I will be staying calm because Apple long-term for me makes sense. If we get to break out of the resistance, expect Apple to go to 259, maybe 280s, or even potentially to 316. But Apple has to gain that trust. They gotta make good products. They gotta keep delivering with AI. There's a lot of expectations from long-term investors, but that's my perspective on it. So, if you got value from this breakdown, smash that like button, hit subscribe, and check out my new song, Billonario. It's live now on the channel. See you in the next one. We do the videos con mucho, mucho amor.